McCormick striking a deal last week. It's combining with Unilever's foods business, creates a roughly $20 billion flavor giant brands such as French's, Frank's Red Hot, and Hellmann's. The deal targets about $600 million in cost synergies, aims to accelerate growth while also expanding global reach. Joining us now in a first on CNBC interview is McCormick's chairman and CEO, Brendan Foley. Brendan, good to have you.
Great to be here.
Thank you for being here. You know, this deal met perhaps with some doubt by investors, in part because of history. And I guess I would start off there, because you are operating under sort of this assumption that can anybody do a successful deal like this where the pro forma is going to have to deliver growth of legacy brands? And many investors would tell you, we haven't seen it yet. Why are you going to be different?
You know, this combination is really about growth and value creation. You're bringing together two iconic brand portfolios and combining them to create really a preeminent global flavor company. And it's also very accretive in the first year, both on sales, adjusted operating margin, and also adjusted EPS. But importantly, this just further strengthens McCormick's focus on global flavor overall. And these are companies right now that have really driven growth already in the marketplace. If you take a look at our performance, Unilever's performance in food, we're operating from a position of strength.
All right, so you feel like that answers the questions investors have in terms of the success that conceivably is going to be available to you? Because again, this idea that can you really get more growth out of brands that have been around for a really long time, given what you're telling us you're going to be doing?
Yes, we can. You know, if you take a look at it from the McCormick portfolio perspective, the Unilever setup, globally from a distribution standpoint, and also their infrastructure and everything else benefits the McCormick brands and portfolio. But also for the Unilever, brands, they're now coming into a company completely focused on food. And so that gets incremental investment and incremental attention on not just Hellmann's and Knorr, but also the entire brand portfolio. But we also see growth in food service, two R&D organizations that are very complementary, combining to really drive even stronger, innovation. So our categories have natural tailwinds already. This just allows us to kind of even drive that on a stronger global footprint.
But you mentioned the businesses have done fairly well. I mean, margins, for example, I know analysts were questioning this. Margins seem to be, are they at a peak? Because if they're already high, where do the incremental gains come from?
The incremental gains, we're going to see, benefits certainly from, synergies coming through the business, but also accelerated growth and revenue synergies across the business as well. So we are operating with pretty strong margins, but that will certainly, improve them. But what's most important is we have to reinvest in the business like we always done. Right now, Unilever and McCormick have really strong track records of investing and increasing, brand investment year over year in the business. We'll continue to do that.
Mr. Brendan, I thought it was a great deal, as you know, and I felt strongly that you needed to do it because even with the great growth you had versus the rest of the industry, you aren't being rewarded for it. I know that there were some people who felt that you had to so-called give away the store to get this. Can you defend how much you gave to Unilever and the shareholders to be able to make it so those naysayers would understand this was existentially positive?
Well, we've been looking at this combination as an opportunity for a long time, and this combination works. For McCormick. And if you think about the size of Unilever and the size of McCormick coming together, the proportions are about right. 2/3 and 1/3, if you look at it that way. And when we bring those, together, we create a larger company that grows faster and has stronger margins.
Do you think that when you look at the supermarket, not as important as I know because of Amazon, you look at the supermarket and what you can do with these brands that you got, and by the way, you got an unbelievable mustard brand, 200 unbelievable mustard brands. Do you see a 6 feet takeaway in the supermarket or maybe 6 yard takeaway in the supermarket?
Well, we work a lot with our retail business partners, and it's all about driving category growth together. We have a lot of knowledge as it relates to flavor in those aisles, and so we work with them a lot on how we look at innovation, how we think about driving category growth, also importantly, how we meet consumer value. So this is really how you drive the categories, and that's what we've been doing for the last couple of years.